report was a big disappointment. The GDP number came in at 1.6%. If you are watching the markets, they clearly did not like this print. And I think that what we want to do today is talk a little bit about why. Afternoon, we had a quite interesting GDP print here today we're going to cover, and a big focus on earnings as we get deep into the current earnings season with a lot of the big tech and Magnificent Seven either already reported or gearing up to report here shortly. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday at 3 is to bring to you the market news, the data, the trends we're watching, and hopefully weed out some of the noise along the way. I hope everybody is staying dry this week. If you're in the Pacific Northwest, it was quite the weather shift from what we had here last weekend. Almost felt like summer there, and now we're right back into what we're used to here in April. So hope you're staying dry. Anyways, we have a lot to cover here this week, and I want to start with probably the biggest item to touch on, which is around the GDP report that came out today on Thursday. And this report was a big disappointment. The GDP number came in at 1.6%, up, to be clear, up 1.6%, versus expectations of, quite a bit over 2% coming into this. And if you are watching the markets, they clearly did not like this print. And I think that, what we want to do today is talk a little bit about why. And what I want to highlight is that I don't believe that it's the GDP print in and of itself that is what's getting the market to react the way they are today. Obviously, it is lower, and it is lower than expectations, but nonetheless, it is still a positive number. There's certainly some things in there that are, suggesting some challenges, but nonetheless, I don't think it's just the GDP print in and of itself. I believe that this, in addition to what we've been seeing over the last couple of months with higher inflation, is really what the market is focused on today, as far as what we're seeing in terms of the pullback. And I think the concern is basically this idea of slower growth and higher inflation. And so for those who do tune in frequently, this message may ring a little bit of a bell as something we've been talking about. And this is kind of that phenomenon called stagflation. And we're going to touch on what that means exactly here as we kind of finish up the session today in our question of the week. But nonetheless, I believe that that's what's going on in the market today is a little bit of concern around a potential stagflation type of scenario. Now, to be very, very clear, one GDP print and some higher inflation recently does not suggest we are there yet. But I think that the market is, maybe weighing this as a possibility today. And that's why we're seeing this knee-jerk reaction so quickly. So we will come back to that because I do want to cover the idea of stagflation, what that means when we've seen it, all that good stuff. But before we do, I also want to touch briefly on earnings season. And really here we are, April 25th, and we have had quite a bit of earnings reported so far, but we are right in the midst of some of the biggest ones coming out. So next week is a heavy earnings week, but this week we also have a lot of the Magnificent Seven companies reporting. So Tesla reported the other day. Meta reported yesterday. We have Google and Microsoft reporting today. Amazon comes up early next week, and then NVIDIA and Apple aren't until May. But nonetheless, obviously it's a heavy kind of time here in terms of earnings reporting and how it relates to the S&P more specifically. Obviously, Google, we've got a lot to cover, and we'll try and touch on some of this next week as well. But obviously, the only two that have really reported in that Magnificent Seven are going to be again, Tesla and Meta, and pretty differing stories between the two. Meta, you may have seen, but it's down really big here today off of that earnings report, more specifically around some of the things that they shared around some AI investments and what they're looking at ahead. And Tesla was actually up pretty big yesterday off of the earnings report, but keep in mind that that's off a very terrible start to 2024. So certainly a sign of light for Tesla, but nonetheless, again, the pop is relative considering where it's been. So we got a lot to cover here as we get further into the earnings season, but certainly this week is big in terms of market cap, and next week is really big in terms of total companies reporting as well. So it's definitely a good time to keep an eye on earnings reports. The other thing I want to touch on briefly is that crude oil inventories were down really big. We got that number this week as well. And so, obviously, as we talk about inflation and oil prices and, commodities and how that might fit into portfolios, this is certainly a relevant data point to touch on as well. Before we get to the question of the week, coming up next week is going to be a very good one as well, because just tomorrow we have PCE inflation data, which ties in very well to what we're about to talk about in our question and what we're seeing in the markets today around concerns. Plus, we have income and spending all ahead of the Fed meeting there on Wednesday, Fed press conference on Wednesday. And that's all prior to a little bit longer break before the next Fed June session. So I don't expect any changes, to be very clear, in interest rate policy, but obviously what he shares will be really important to listen to. Okay, so with that, let's jump into the question of the week, which is a really good one and very important, obviously, given what we're sharing around GDP. The question is basically, what is stagflation? And so I want to highlight, a lot of the folks who listen were around, for the 70s and felt this and saw this firsthand. So you probably remember exactly what this was, what this felt like, and the impacts on the economy. But back in the 70s, we had this phenomenon kind of, rear its head as well. Again, I'm not saying this is the case today, but it has been something we've been watching really closely. And if policy isn't carried out correctly, it is something that we are, a bit concerned about moving forward, especially if the Fed were to drop rates too soon or, kind of allow for a higher inflationary environment. But basically what stagflation suggests is exactly what I shared earlier. It suggests a slower growth and a higher inflation environment. So we've obviously seen the last couple of months here, inflation picking back up. Up until this point, growth has continued to kind of keep up as well. Now, again, one GDP number is not enough to write home about, but nonetheless, it is important to keep an eye on, because that is ultimately what drives stagflation. It would be an environment where we have higher inflation like we've seen recently, and an environment where growth starts to slow. And as you can imagine, that can create a lot of challenges if we're not growing to keep up with some of the inflation, pressures that we see, right? If things slow and inflation picks up, that can put a big strain on not only us personally as consumers and our dollars, but also just the economy as a whole, obviously, as that trickles through. So it's very important to watch. Again, I would not suggest that this one data point would mean that is where we're going. It is something we've been watching very, very closely ever since all of this inflation conversations picked up, but more so from the perspective of how the Fed policy could play a role in that. So I guess it maybe highlights the importance of the Fed here moving forward and making sure that, we kind of cover what they're sharing and what they're watching. So great question of the week. I hope that is helpful, especially given the data today. Be sure to tune in next week, because that inflation number tomorrow is going to be really important in this conversation. So we'll come back to that and talk a little bit about the Fed debrief as well. In the meantime, enjoy your weekend, stay dry, and we'll see you next Thursday at 3.